Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will show you how to set up your charts using IPDA and tips on this concept. Before trading the new month, every trader must follow these 3 steps to gain insight in the Forex market. These steps will be indicator free and do not exclude other marketplaces, so stay tuned. Leave the indicators alone. This will be a 3-step process, starting with core curriculum, chart activity, and lesson plan. Let's jump right into core curriculum. What is IPDA? IPDA stands for Interbank Price Delivery Algorithm. This entity controls the price action we see on our charts. It is the sole reason we get the 4 phases of the market: consolidation, expansion, retracement, and reversal. Who is using IPDA? IPDA is used by commercial speculators to move large orders in the market. Why learn IPDA? Learning IPDA will give you clarity on what levels are significant to the current price. When is IPDA working? IPDA is always working and exchanging orders every second. Where do I use IPDA? IPDA can be applied on a daily time frame. How to use IPDA? You can apply it on the current trading day or the first trading day of the month. Let's take a look at our chart activity. When it comes to the chart activity, the first step you must follow is finding the first trading day of a new month. Next, you count back 20, 40, and 60 trading days from the first trading day of the month. Last, find the highest high and lowest low in each look-back data range. Let's follow this on a pair together. Here, we're looking at British Pound versus US Dollar, which is GU, and we'll be looking at our current trading month for this example. Currently, we are in January, so we're going to look for the first trading day of this month. So we're going to look on the right, and we can see the first official trading day is going to be January 2nd, Monday, 2023. So that's the start. From here, we're going to look back 20, 40, and 60 days from the first day. So we're going to count back 20 days first, see what that looks like. That's going to be December 2nd, 2022. We're going to count back 40 days now. This is going to be November 4th, 2022. And then we're going to count back 60 days now. And that's going to be October 7th, 2022. Now at this point, we have all our look back data ranges. We're then going to find the highest high and lowest low as the last step states. Looking at the 20-day period, we got the highest high, which is here. The lowest low, which is here. And I like my lows to be blue and my highs to be red. We go back to the 40-day quadrant. The lowest low is going to be here. And then the highest high is going to be here. The lowest low within the 60-day quadrant is here. And the highest high in this 60-day quadrant is going to be here. Now that we have finished our chart activity, we're going to jump right into our lesson plan and see how we could put these things together to frame some trade ideas. First, for the lesson plan, we will take a look at technical analysis. Then we will perform fundamental analysis and gain macroeconomic data that can aid us with our insight. Last, we will bring together the 2 analysis techniques to form a hypothesis on what price should do in the near future. Follow along. Every new trading month, I'm asking myself 2 questions. Is price going to give me a quarterly shift, meaning change trends? Or is price going to continue its current trend? Now, I have no idea whether or not if the market is going to continue its trend or make a quarterly shift during this new month. However, using IPDA data ranges, finding the highest high and lowest low within each quadrant, I'm able to structure some type of storyline, especially around liquidity. Using IPDA look-back data ranges can help you figure out where the large orders of liquidity are residing going into a new trading month. Going into a new trading month, I know that one side of the market is going to be taken, whether that is buy-side liquidity or sell-side liquidity. Through our chart activity, you've labeled all the highs and all the lows for each quadrant. Now, if you look for the highs and lows that are still intact, that is most likely where the large order of liquidity is going to be residing. Here I marked off the sell side liquidity and the buy side liquidity in those obvious areas that IPDA has showed us. This is most likely where the algorithm is going to draw, and we could frame a trade setup around the liquidity being liquidated. This brings me back to those concerning questions I ask myself every trading month. Is this going to be a quarterly shift month, or is this going to be just a continuation? Now, the month could move sideways, but those are the two main questions I'm asking myself. Is it going to change trend, or is it going to continue? Simple. I don't know. However, these levels will give me further insight on where to go. IPDA is going to give me further insight on where price should go and where there should be a reaction. So if you were to ask me, Forensic Forex, what do you think GU is going to do for January? I would tell you two different scenarios. The first scenario, I would want to see if it was a quarterly shift, price come up, hit a significant high, whether that's the 40-day high, an old high, or mainly take out the 20-day high, because I know there's large orders of liquidity sitting up here, right? And then price comes back down to take out sell side liquidity and start a new trend to the downside. Now, if it was the flip side, if I thought this was going to be a continuation, right? Because October was bullish, November was bullish, December was sideways. December is normally going to be sideways because central bank traders are not trading around here. Large speculators are not trading around here. They're going on vacation. They're going on holidays, right? Especially the majors. The majors are going to be moving sideways around this time of year, typically, right? So if you're a retail trader, definitely don't trade here if you don't know what you're doing. But if I thought this price action was going to continue to be bullish, right, I would want it to take out sell side liquidity, right? Or run into an old daily high and then give a reaction higher, taking out buy side liquidity. That's how I'm using these levels. To take this further, we can incorporate fundamental analysis. Taking macroeconomic data and pairing it with price action can give us more insight going into a new trading month. The first piece of macroeconomics that I like to use is going to be seasonality. Now, seasonality is not the end-all be-all, tells you when to buy, tells you when to sell for the year. It does give you general sense of when to anticipate probably the high of the year or the low of the year, or when that pair may be going sideways for a month or a couple of months. Now, this is chartequityclock.com. No, I am not paid to go on this website and show it to you. I don't even subscribe to their services, but I do use their services for free. How I work around it, because you do have to pay after a certain times, they will block you from seeing the charts. Just go incognito and you'll be able to see whatever charts you want to look at. So I type in a keyword, pound. So I'm looking for British pound, FX, dollar currency. And we can see the seasonal chart. You can see it's a time frame of a 20-year range ending in December 31st, 2022. So it's looking back 20 years and averaging that data and showing you what pound is normally going to do. We can see here for January, it looks to be making a high in January, right? So that could further my expectation of pound potentially continuing its bullish trend. Or that could not happen. You know, seasonality is telling me that for January, pound should be bullish. But then in the price action, right, in the technicals, it's actually showing me that it's bearish. So don't just use this as a sole reason to tell you when to buy, when to sell for the year, but use this alongside with price action to help you frame a trade setup. So right now, I would say I would like to see pound be bullish because price action is showing that it should be bullish, and the higher time frame is bullish. Going into January, I would like to see it rise and probably make the high of the year, as it's showing here in this chart. Make the high of the year in January going into February, somewhere along those lines. Now, what I like to do is look at the counterparty. I'm looking at DXY as well. So we'll go back. We're going to go look for the dollar index, if I could find it. Sometimes I have trouble finding it. Dollar. And we can see here, not much going on. Doesn't look like it's making a huge drop and making a bottom the same way pound is making a top in January. It looks more like sideways price action. So this doesn't look good to me. If I see the dollar move sideways, and if the price action does reflect that, then I know that the majors as well are going to go into consolidation. So dollar in consolidation means GU, EU, AU, or typically, and NU are typically going to go into consolidation. But this is one key factor that I like to use, seasonality, to help me with my bias going into a new month. With our technical analysis and fundamental analysis and taking it together and making a highly educated guess, we could probably speculate to see that GU makes a higher run into the month of January. Now, I would like to see the sell side liquidity taken first and then price run higher. Now, it is January 9th and this is January 2nd, so we could play it out so you guys can see the result before the end of this video. So let's check it out. And this is where we are currently in price. We can see that the sell side liquidity was taken and price is starting to look to reach back into buy side liquidity, taking out these equal highs, all these previous daily highs, potentially maybe filling in this inefficiency right here, and then even reaching for that 20-day high as a target. So these are some potential possibilities that may play out. Like I said, I was expecting price to come down here, and if it did come down here, it should make a run higher. It could come off this 40-day high and then go lower, or run right through the 20-day high. That all depends on what price is doing around that time period and what it's doing during that time it hits it. What session is it in? Is it a New York session? Is it in London session? Is it an Asian session? Those things are factors as well. This is the process that I'm using going into every trading month using IPDA. I am not saying that you're going to get the same results as me, but I am showing you ways that you can strategically set yourself up to be a more successful trader going into any trading month. Let's take an example of US oil back in 2021 when I used IPDA. So here I scrolled back to December 3rd, 2021 when I posted this on TradingView. You can see I'm using IPDA the first of the month, going back 20, 40, and 60 days. I'm marking off the 20-day high, the 20-day low, 40-day high, 40-day low, 60-day high, 60-day low. I do have a simple PD array, a bullish order block. Last down close candle before the up rally, price finally comes back down into it the first of the month. You can see the 20-day low has been liquidated. Sell stops have been taken. Now we have all this to the upside, buy side liquidity, buy side liquidity. You have an old low, an old high, which can give reaction to, and you can see if we pray it forward, price ultimately blows right through it. So you can see price comes up into that SIBI, comes back down into that old 60-day low, retests it, then runs high, runs back into what? That 40-day low right there, slows down a bit, comes back down into that SIBI, rebalances the other fair value gap, and then price runs back up higher, runs into that old high again, stalls out again, then runs higher, blasting off to the 20-day high and the 40-day high. So this is not by coincidence. It just happened that the storyline played out and IPDA showed me the obvious areas of liquidity. That's all. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.